Hello and welcome back to The Note. Let's talk about the World Cup today. I, like many other financial journalists, nurse a secret ambition to talk about football. And it turns out it's not just financial journalists, it's also investment bankers, as Goldman Sachs have produced this fascinating report on the World Cup and the economy. With me now to discuss it is their chief global equity strategist, Peter Oppenheimer. Peter, thanks for joining me once more.
Hi, John.
So let's start with the question that many people will want to know: who's going to win the World Cup? According to Goldman's model, Brazil are overwhelming favourites. Perhaps not surprising, but take me through how you built this model.
Right. Well, the only surprising thing perhaps is that the probability we put on Brazil winning is perhaps higher than many other people would suggest.
It's almost 50%.
Right.
Yes.
We've based it on a model that looks at the history of international football tournaments, non-friendly tournaments, going back to 1960. And there are about 14,000 observations. We've thrown those together with a number of other variables, looking at home advantage, for example, or how many goals of each team scored against the oppositions, and so on. It's weighted, so the more recent games, of course, have a bigger influence on the outcome. And it's thrown together in a probability analysis to get this sort of distribution. Right,
and last time out you had Brazil as rather less clear favourites, but quite impressively Spain and Netherlands were the next two on the list who were the eventual finalists.
Yes.
So basically this does add to the question is why is so much of the world this fascinated by it? Because there are only 8 countries that even have a 1 in 100 chance of pulling this off.
It is interesting. I mean, you can see the distribution falls off very, very quickly after the top 5 teams, or 7 teams in particular, as you say. It then becomes a very small probability. But, of course, football is a very difficult game to predict. It's very low scoring. And lots of things can happen that you can't really put into a model. Injuries, for example, or red cards and other factors. This is a dynamic model, so it will be updated as the tournament goes on, and the probabilities will change as the tournament goes on.
As England's performance chance dwindles to 0 and Brazil's rises.
Let's be more optimistic. It could go the other direction, but you can see England, we put only about a 5% probability it's in the final, and about 1.5% probability that it wins at this point.
Okay, let's try to tie this in to markets. Now, there are plenty of spurious correlations one could have fun with, but this begins to look as though there's something meaningful. This is how the relative performance of the stock market of the eventual winning country, and there does indeed appear to be quite a significant sentiment boost immediately after a team wins the World Cup.
Right, and it's pretty consistent. If you go back to the early 70s, every single occasion, apart from one, which was actually Brazil in 2002, in the midst of a crisis, the winning team saw a bounce pretty significant, around 3.5% relative over the first month. It didn't last very long, and of course, ultimately, the fundamentals take over. But there is a pattern that seemingly sentiment boosts the stock market of the winning team, at least for a short period of time.
Now, does that mean Brazil we have as our heavy favourites? Brazil as a stock market has been badly out of favour for some years now, heavily underperforming the MSCI All World. Does that mean, therefore, how seriously is Goldman taking this? Does this mean that we should follow that logic and buy Brazil ahead of a likely World Cup victory?
Well, I think, first of all, this suggests that you can wait until you see who wins and then expect some positive boost in the short term for the winner. In fact, the runner-up tends to also see some underperformance for a similarly short period of time. Brazil has had some fundamental problems which have been reflected in the stock market, and ultimately, as we've seen in the past, it's really the fundamentals that continue to drive it. But in the very short run, it does appear that sentiment has an important influence, and statistically, if Brazil does well and wins the tournament, particularly at home, with all the confidence that that's likely to bring, I would imagine there would be a relatively short-lived boost.
Okay, Peter, thank you very much indeed. I hope this was fun. I certainly enjoy talking about these things. Not only is there, I suppose, an argument for a flutter on Brazil, also Argentina, also a stock market that's been badly out of favour. I think perhaps the best idea, though, is to actually just enjoy the spectacle.